Jones Industrial Average at the highs of the session, 210 points, and you're looking at the reason there. 287,000 jobs created last month. At least that's the initial read, far more than anyone had expected. Consequently, remember that British exit panic? Well, we've erased all of those losses. But the economy, well, we know the future is far from being clear. I want to go to John Layfield and Deirdre Bolton still with us as well. You know, John, I would say for me, one of the overall themes here is last week and today, I like the idea that the stock market is going up on good news. You know, in other words, let's not root for more central bank intervention, more money printing. And we saw a couple of good things last week on the manufacturing. We got a much stronger than anticipated number today. The big question, though, is it sustainable?
I think it is, Charles, and look, I agree with you on the good news. It's such a crazy world that we're in that when the jobs report is not that good, the market goes up because the Fed's going to keep rates low. It's such a policy of intervention that there's no real metrics that make sense with the stock market, except for the fact, look, 60% of S&P 500 stocks yield higher than the 10-year Treasury. 70% of S&P 500 stocks get their earnings domestically. So anytime there's trouble in the world, like the Brexit or anything else, they're going to come to the United States. When you see a good jobs number like that, U.S. equities is the place to be, and it's good to see good numbers for a change.
You know, I get that, John, but you argue, which one is more overvalued here? Because the money is also pouring into our treasuries. So, you know, I mean, treasuries have been on a run since 1981 for the most part. So, and then gold is broken out, and people start to scratch their head. They don't know exactly where to invest and where to hide out. How do you make that distinction?
I stay with high yield, high cash flow dividend stocks is what I do. I bought just some good old American companies recently. I bought Verizon, I bought AT&T, bought GM, Ford, all those guys yielding over 5%. I bought GlaxoSmithKline because of the yield over 5%. They were in the UK. They'll benefit from a pound being lower. I think you're going to be very fine with that. Look, it's like an elephant for a quarter. It's a great deal if you want an elephant and if you got a quarter. So what is fair value? Fair value is what people are going to pay for it. And right now with the Fed, with this intervening policy, this is a fair value of the stock market. Once rates start going up, I don't think they'll go up very fast. That's when you have to reevaluate. You know, Deirdre, I like when John was talking about those names. I tell people a lot, if you own companies that have been around for 100 years, if you own 10 of them, more than likely all of them be in business another 100 years. If you're afraid, sure, that's a good place to start.
It's the old-fashioned Peter Lynch model, right? You buy what you know, you buy what you like, you know the company, or you think you know the company, the way it operates, but at the very least you have some familiarity with the products and the business model. And this is not necessarily for day traders, right? Peter Lynch's model was always, right, you know, a 1 to 3 year horizon. Curious, though, about the labor force participation rate, John. I mean, that's rising. What do you make of that?
Look, that is certainly a problem. That's a big issue. And even more importantly than that, Deirdre, I heard your comments earlier, which were spot on. The problem we have right now is our GDP. Look, the Fed can't raise rates because our GDP is very much an anemic 1% coming back in the first quarter. So if you really do have a 4.9% unemployment rate, and I understand the labor force participation, we only have a 1% GDP. That is impossible, right, unless these jobs that were replaced, the new jobs, are not as good a jobs as the ones they replace. So we do have a lot of problems going forward. I think our economy is slightly moving forward, which is better than moving backwards, but it's not gangbusters moving forward. That part is wrong.
Not by a long shot, John. By the way, we should have 1.6 million more jobs at this point, considering typical labor participation. But a good move in the right direction today. John, always appreciate it, buddy. Thank you very much.